Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P and the Qs, another slightly muted day. However, there was a bit of pain under the hood in the event that you were in, mostly tech names today. If you take a look at the big tech names today, a lot of them sadly coming down. Not AMD though, they were up 9%, but Apple, Amazon, Google, Meta, and a few more. Tesla, Palantir, Uber, and TSM on this list alone. And additionally, if you were in the retail fan favorite names, it was not a very good day at all. Take a look at this list right here. Everything from Circle, NBIS, a lot of the neo cloud providers down huge today. NBIS, APLD, EOSC, another retail fan favorite as of the last 2 months. ALAB, ASTS, and so many other popular growth names were down today. However, today was a very good day in terms of the overall market. One of the concerns we've had recently was market breadth and market concentration. And today, those concerns were definitely not present. Even though tech took a day off, we had some very nice performance from the rest of the market. And that is exactly what you need on a day where big tech is taking a bit of a breather for no apparent reason. No news, nothing like that. Well, you do need the rest of the market to kind of be there and uphold those massive weights. So, in terms of today's price action, as I mentioned, no news whatsoever. And speaking about the lack of news, we may not get big news anytime soon. Take a look at this. The White House saying that October jobs and inflation data may never be released because of the government shutdown. I've been paying attention to this for the last 2 days, wondering when are they going to release the October non-farm payrolls? Is it going to be as part of the December release? Or are they going to do it maybe sometime next week? Well, sadly, guys, we may actually never get it. And you might think that the White House is doing this to kind of prevent bad data from being out there. However, I will remind you, the first goal of this administration is to get Jerome Powell to reduce rates as fast as possible. So if the data was that bad, they would probably want to release it so that they tilt the Federal Reserve's hand into cutting rates a little bit quicker. But that is very unfortunate. So we'll only have to do with the data that we have this week. And towards the end of the week, we're getting a couple of indications here. You were supposed to get the CPI on Thursday. Sadly, that won't be released. And on Friday, well, we do get a couple more. You get the producer price inflation index and also the retail sales metrics, but not that busy of a week in terms of news, and also not that busy of a week in terms of earnings either. Most of our earnings are kind of wound down. Sure, tomorrow we get Walt Disney and a few interesting names such as Applied Materials, New Holdings, and a few Chinese names as well. But for the most part, earnings are winding down. And I'll remind you, we covered this yesterday. Earnings so far have been really, really good. The earnings scorecard for the quarter, with 91% of all companies in the S&P reporting so far, 82% of them reporting positive EPS, and 77% of them representing a positive revenue surprise as well. Additionally, I brought this chart up yesterday, but it is also noteworthy to take a look at. You will notice that in terms of your mentions of economic slowdowns, there was a lot less. In earnings calls, the mentions of economic slowdowns are the lowest since 2007, and the overall slowdown story count in news coverage has trended lower to the weakest level since to mid-2021. So very strong. This is in terms of the news release, the top graph right here. You'll see that there is less and less mentions of economic weakness. And in terms of your earnings calls, which is the bottom chart, you will also see that as well, to where we're very low right now. So companies, by large and by far, not really concerned. Are there certain discrepancies in terms of consumer spending across different businesses? Sure, but are companies anticipating a great big economic downturn in the next few quarters? No, we don't have any indication of that so far in terms of their earnings releases. So in today's video, guys, we're going to keep it very simple. It's going to be a whole bunch of charts, because I'm sure a lot of you are in a lot of these names that were down huge today, and you want to know what's going to happen. How far can we possibly still drop? So today we're going to be doing a bunch of chart analysis, starting it off, of course, with our major index rundown, run through the SPY, the Qs, and all of our minor sectors, check on that the market breadth and the sector rotation. Thereafter, we'll be going through our big tech list and derive of these companies, which of them can be nice swing trade opportunities, and also which of them are currently still fairly positioned in terms of long-term buying opportunities. At the end of the video, we'll spend some time talking about the biggest losers and thereafter the biggest gainers of the day, because now a lot of the money is rotating into some of the names that just haven't really gotten much love over the past 2 months. And they're dumping a lot of the names that were retail fan favorites that were running extremely, extremely hot. So we'll take a look at that list at the end of the video. And that's going to be it for today. So we should be able to do this video under an hour. So let's get right into it, shall we? The SPY up 0.06, the Qs down 0.08. But notice, guys, financials and healthcare, the two other largest weights in the market, having a very strong day, arguably one of the strongest days that they've had in a very long time. Moving into the heat map right here, you'll see that most of the damage was concentrated in a lot of the big tech names. Oracle, Palantir down a lot today. Apple, Amazon, Tesla, Google, and Meta as well. NVIDIA, Microsoft able to keep it up a little bit, but most of the damage indeed was in big tech. And also some names that are just not in the S&P, the retail fan favorites, the fast-growing AI-related plays. Financials, very nice and very broad day, right? You remember a few weeks ago, it was only the banks carrying and kind of everything else, insurance, financial data providers, they were all down. No longer. Today, very nice day of breadth there. In terms of healthcare as well, although Eli Lilly continues to carry the sector on its back, we have some nice performance here, and even some of the health insurance plans moving up higher, and the sector definitely needed that. It was kind of struggling to break out of the resistance zone previously, as we know. Eli Lilly was kind of carrying the markets, and we were kind of looking for more market breadth in healthcare to really start lifting. Look at Eli Lilly, man. Eli Lilly moving on to a brand new all-time high. So they've definitely carried that sector on their shoulders, and now their friends are showing up to participate a little bit too. So nice gains there. And the bottom half of the market, not much in terms of action there, but it was fairly mixed. But overall, more names that were up than down. So not too bad of a day in terms of market breadth. In terms of our one-day relative performance, guys, materials, healthcare, financials, utilities, industrials, technology, all moving slightly higher. And to the downside, communication services, which I'll remind you was largely Google and Meta. To the downside, energy, cyclicals, and real estate remain in a little bit of a pain point. And on the 1 week relative, something that matters a lot, because you might remember 2 weeks ago, this entire list right here was red, but now we are seeing some breadth appear in the markets. May be pretty much everything here, except for cyclicals and technology in the green. So you're seeing a bit of a pullback on some of our fan favorite tech names and even big tech names alike, but the rest of the market is there to support. And that is something that we've been paying close attention to over the past 2 weeks with, I'll remind you, the bearish catalyst list, right? So we went over this a few weeks ago, 2 Saturdays ago to be specific, and I was telling you guys, watch out for these short-term bearish catalysts. One of them was the big concentration in the markets, which was this in relation to the AI bubble, the market being overvalued. The other one was the fact that the technicals were a bit stretched. Since then, we've kind of fixed those two things. The market is no longer as concentrated as it was at this same time 2 weeks ago. We've also perfectly backtested the 50 daily EMA, something the SPY really hasn't done much over the course of the past 4 or 5 months. And even the weekly, guys, we backtested the 12 EMA on the S&P, which is a really good technical indication for a short-term buy. So that's everything for your market introduction. Hopefully you enjoyed. Now, let's just dive right into the charts. No earnings to cover, no news to cover. So let's get right into it. In terms of the SPY right now, guys, healthy daily uptrend. We have equal lows right here, and we know the bounce size is pretty healthy right now. Support stays below us, 674 down to about 666. This little pocket right there, prior resistance, should be current support. And in terms of the size of the bounce, there's 2 ways that we can kind of resolve this, right? Either the full V shape, or we have to embark on the 2-step process. If we're looking for the 2-step process, you just have to look at the size of the bounce, right? A 78% bounce on the S&P, so that definitely does give the bulls a lot of room, guys, to possibly set some higher lows. In the event they cannot V-shape this in one clean shot, you got a lot of space here for a backtest and a support and a possible further rally into the continuation of the month of November and early December as well. Why would we have a bullish leaning bias? Well, quite simply because we've never lost the higher time frames. The weekly higher lows were set with the drawdowns last week, and we might just be looking to expand. Whether we expand that in one clean shot V shape or in 2 shots, the bulls are definitely looking a lot healthier than they were at this period all the way back there. Moving on to the Qs right now. The Qs down a little bit today, but we have to do a little bit of checks as well. In terms of the trend, well, we did not lose equal lows right here, and the size of the bounce is also quite decent on the Qs. Not as good as the S&P, because this is technology concentrated, right? But still very decent. It's a 618 bounce. So it does give the bulls the space. In the event we get a little bit of weakness into the next few days, you'll notice here that the futures markets are a bit red. We got a nice fallback area. Prior resistance should be current support, and that is the pocket between 611 and roughly 606. So if they have to do this in 2 shots, they definitely are working with a ton of space, and we do have a bullish leaning bias because the bulls never lost the beautiful weekly uptrends that we're in right now. So I'm still fairly bullish into the end of the month of November. And the only reason that I remain bullish is because we have market breadth expansion. That was the one thing that was making us a little bit concerned on the channel in the past 2 weeks. But if it's just a rotation out of tech and out of some of the retail fan favorite big growth names, but the whole rest of the market is there to participate, I would assume that this is still a relatively healthy market for the time being. Speaking about financials right now, financials, very strong breakout, guys. And we were looking at this level yesterday, resistance range, $53.31 down to about $53. Big resistance, big support, big resistance again. Finally through it, finally above the EMAs in the context of a nice daily uptrend. And now also, they close the week like this, guys, a beautiful new weekly uptrend. And that's important because we haven't had the weekly uptrend in quite some time. It's just basically been some very sideways and awkward consolidation. Moving on to the monthly time frame, you'll see it even better. We were just looking for a monthly higher low for further expansion. So all of this consolidation noise was a fantastic opportunity, guys, to build some positions, either swing trades, which we highlighted on the channel, names like JP Morgan, right? When we had the JP Morgan pullback, it was a fantastic buying opportunity, and we covered it on the channel. This little pullback, setting some higher lows, great little entry opportunity for those of you that took it. We were able to close our trades on JP Morgan yesterday upon the touch of the near all-time highs. And even a name like Goldman Sachs had kind of the same setup, and you can see they're breaking out higher. Beautiful breakout, retest of a level into the 12, and now you are moving higher. But some names remain very attractive still. Visa, MasterCard. I know I sound like a broken record, guys. The last time you guys heard me sound like a broken record on Visa, do you remember what happened? Because I do. It was back here on the channel. And it was the same thing. Visa for months and months and months, and MasterCard were just down, 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 down. And then they went on a very nice rally. I think this is a beautiful accumulation as well. On the monthly, it definitely does just look like a very simple bull flag above the 12 EMA, above 6-7 months of support. So Visa and MasterCard, still some of my favorite opportunities. But shout out to some of the financial data providers like SPGI, building positions down here in the 485 to 475 range. Pretty decent for them, and also pretty decent for Moody's Corporation as well. And even one that we highlighted a few weeks ago, Berkshire. Whenever Berkshire comes down into the whole 475 range, not a bad opportunity, right? Beautiful support. We're working with the monthly 12 EMA. That one was looking pretty good, so we were able to sell some puts for those of us that had big accounts down here, and now those orders are very profitable as well. So there are some opportunities across financials, depending where you're looking right now. Moving on to our healthcare names. So healthcare, very, very strong breakout, guys. I mean, look at this daily push. Super strong move. We are getting a bit extended here on the daily RSI, but it is a gorgeous daily uptrend. In the event we have to pull back for a bit of a retracement, well, what better pattern than my favorite one to look at, right? Resistance, resistance as well, resistance for a while, and now you might just backtest this as support. That would be a further entry for healthcare bulls, right? Beautiful weekly uptrend right now. If you get the backtest, it would be a perfect setup for putting a stop loss below there and targeting a breakout towards the all-time highs. Looking very attractive on healthcare. I'm still holding a couple contracts. We bought most of our leap calls down here. Take profit number 1 was achieved upon the touch of the big resistance range. Take profit number 2 area for me is the all-time highs. This has been a slow trade. Well, it started off slow and then we kind of accelerated, right? But it was a very easy trade in my opinion, guys. We were kind of backtesting what? Like 3 years worth of support? And healthcare was extremely sold off by large and by far, and also one of the more the sectors that had the cheapest valuations amongst all of them, right? Look at the monthly MACD. It's no joke, man. When you see a monthly MACD crossover after like a year's worth of consolidation, you kind of have to pay attention. So the bulls are looking very, very strong for some of those breakouts. Moving on to semiconductors, everybody's favorite sector as of the last 1 and 2 years. Daily, still in an uptrend, but the bounce size is not the best, right? They set the higher lows yesterday. So pay attention to this, right? Now you're looking for some higher lows. If you keep breaking down, I mean, it's a bit of an inside bar with yesterday, so I'll kind of give it to them, but we didn't create that much space off the lows, right? In terms of the bounce size right here, it was an okay 618 bounce in one single day, I guess. So it's not terrible, right? Okay, it gives them the space to do it, but several other things are coming in conflict with that. The fact that we are still in overbought conditions, right? So in the event we have to take a further breather on semiconductors, just focus on the backtest of the 12 EMA, something that your semiconductor bulls have done a lot. In my opinion, guys, for semiconductors, the next very big catalyst is going to be the NVIDIA earnings coming out next week, right? We know NVIDIA has been a bit choppy recently. They had their big push after the GTC conference, big drawdown last week, over the last week and a half pretty much, and they have their earnings next Wednesday. So I would not be surprised if semiconductors remains a little bit muted before those NVIDIA earnings. And then NVIDIA earnings is either going to take us home for the expansion trade, for the recapture of more gains on the weekly uptrend, or is going to send us into perfect consolidation, which would be at that point much needed consolidation, because on the monthly, we are quite extended from our moving averages, right? And we are monthly overbought as well. So is the pullback going to be triggered by NVIDIA earnings? I'm pretty sure they're going to put out amazing earnings, but how's the market going to react to them? We know this quarter so far, there's been a few awkward reactions after earnings to where companies are posting really strong numbers, but their stock price goes down nevertheless. So we'll have a look at what happens with NVIDIA earnings. Looking forward to seeing them over the course of next week. And now looking at the Russell down about 0.25%. Not the best day for the Russell, but the price action is still very choppy, right? So we lost the daily uptrend, downtrend into support, 240 down to 235. What we're going to be looking for here, can the bulls get this back in two stages? If you look at the size of the bounce right here, it was at the top of today, a 618 bounce. So they do have some space to make this happen. But as you guys have seen, it's been super choppy over the course of the past roughly 2 months. As a result, the weekly time frame is just moving sideways, nice consolidation, and the monthly is also just consolidating a little bit. In the event we get the breakdown, guys, I'm going to get one of my preferred entries. 231 to 225 would be a very nice breakout retest of prior big resistance, and that is the area that I'm possibly looking at to build a position on the Russell if I had to do it. Moving on to some minor sectors right now. Consumer defensives, not the best day, but they are off the lows. They were oversold conditions over the course of the past week, and we were highlighting that this was a very nice bounce entry trade, right? But they got a lot of work to do. It is still a weekly downtrend, so you're going to need to give me a bit more than that on the weekly, because a weekly downtrend, guys, takes weeks to reverse, right? You need to reset the trend over again, or rather in a new fashion. Moving on further here, resistance, current support as well. So still, consumer defensives could be a very nice trade, possibly. I'm personally looking at building more shares in my long-term Costco position. This one has done really nothing. I mean, there's been some ups, there's been some downs, but we are back to the same price that we had last year. So Costco hasn't moved from last year's price. So decent area to maybe pick up some long-term shares if Costco is something that you're looking at. Moving on to utilities right now. Utilities is a little bit mixed. So we know we're in the context of a daily downtrend. The bulls are looking to get this back. You'll take a look at the MACD right here. They're trying to curl this over, set the daily uptrend, and put an end to this weekly consolidation. The most beautiful chart, in my opinion, is this weekly. Very casual weekly uptrend, back testing the 12 EMA every single time we kind of pull back there. And I'll remind you, I keep saying them, but my favorite names, VST is coming into us, guys, right? 175 down to about 160, decent longer term entry. We know the power requirements for data centers are going to be massive. We do not have the power right now. So these producers have a lot of pricing power, in my opinion, guys, coming in the next few years. This one, Duke Energy, also with a very beautiful back test here of prior resistance, support, and support again. Very attractive names all across the board in some of these utilities plays, even Constellation Energy, right? Give me a bit more of a back test, and I could be very interested in playing this one if you give me that whole 330 down to 300. Just shares, just complementing a portfolio with a thematic swing trade type of thing across many of your favorite electricity utility providers, whether those are natural gas, solar, nuclear, things of that nature, right? So overall, not too bad in terms of your market performance today. If we have a look at gold breaking out really strong, guys. On that Wednesday session, we had a nice move of 1.66%. Daily uptrend clearly in motion right now. Look at the MACD, crossing the MACD after several weeks of consolidation. The bulls looking to get it back. Now, the best trade entry would be if we pull back here close to like the 4,000 area again. We may not backtest these guys, but if we can backtest the EMAs, that could provide a second entry for continuation of the longs and just continuation of that point, at that point of your weekly uptrends. So looking quite good on gold. It's not cheap right now in terms of your monthly overbought conditions, right? It's not cheap, but the trade setup makes a lot of sense if we are trying to trade this on a shorter term time frame. Moving on to Bitcoin right now. Bitcoin not terrible, but the bulls still really soft, right? We're trying to hold on to some support lows, 107 down to 100. We've been very clear about saying that the bears were in control of this, right? The bulls, they tried to get some space and go for the daily uptrend, but it's not happening right now. We are in the context of a weekly downtrend and in the context of monthly consolidation. So weekly and monthly consolidation, guys, it takes a long time to turn around. And I'll remind you, in the event we cannot protect these support lows or this 12 EMA, you might be coming down here to 94 to about 88,000, which would be a nice fib retracement, right? You'd be talking about a 618 retracement roughly. That would be the next area that I would be looking to accumulate a bit more Bitcoin for your longer term buys. Moving on to Ethereum right now. Ethereum, kind of the same concept, right? It's just been very weak. Daily downtrend, the bulls tried for a push here to set up some space for some higher lows and the trend recapture. So far, right, they're trying. We'll see if they can get it done, but don't forget where you are, right? Weekly is a downtrend, and that's been the case for a very long time, a couple months at this point. Next support area is still 33, down about 2,900. We were very clear that this was a nice first level entry on Ethereum, but this is going to be area number 2 to enter. Just looking for a bit more monthly consolidation. I know monthly consolidation sucks. It's very choppy. It shakes a lot of people out, right? But just pay attention to your support levels in combination with the size of the retracements, right? We are still in monthly uptrends on Bitcoin and Ethereum, but the consolidation may have to last a little bit longer. That's everything for your overall market rundown. Hopefully you enjoyed. Now, let's dive into some tech names, shall we? So first off, we'll try to get through these quickly because not much has changed. Apple still looking solid, still in the context of a nice daily uptrend. Your higher lows are here. 266. If you lose this without making new highs, first daily downtrend in a long time, and that would just be very healthy weekly consolidation. I'm personally looking for this trade setup. If we can come back to the 12 EMA right around here, 255, it lines up with your prior all-time highs and could just be looking for a nice weekly higher low for a possible swing trade long. Right now, the price is a bit extended. We're a little bit overbought on the weekly timeframes. In terms of the valuation as well, for some long-term positions, guys, I'm not buying Apple up here. I'm not selling Apple up here. It's just a hold. The valuation is a little bit stretched. They should be having really good Q4 earnings, but still, you always want to be careful on what you pay for something in terms of your forward valuations, right? Moving on to AMD. AMD 9% higher. And the reason being is what we highlighted yesterday. Yesterday, NVIDIA had their investor conference day, and they showed really strong data center growth rates for the next 3 to 5 years, but also net improvements in margins, which is funny because they could have given that guidance on earnings a few weeks ago, and they hinted at it a little bit. But now yesterday, Lisa Su is basically reassuring investors and saying, no, we're probably going to grow faster than what we said just about a week and a half ago, which is kind of humorous in a certain fashion, right? You would think they'd disclose that on earnings, but still, 9% higher, looking very good right now. We didn't lose the daily uptrend. Those were equal lows right there. And now you got a really nice bounce size going. So the clearest time frame, in my opinion, because the daily is kind of very choppy, tons of gaps all over the place. Clearest time frame remains the weekly, in my opinion. It is still a very nice weekly time frame right here. Your higher lows are set at about 224. We are possibly looking to push a little bit higher. Psychological levels of resistance will remain 275 and 300. AMD is looking good. It's very tough to position up here for a swing trade. It's a very greedy long because you are still slightly overbought on the weekly time frames. But if we're investing for the longer term, for the next 3 to 5 years, which was AMD's guidance today and through their earnings, you should be pretty happy even buying shares up here, growing revenue and EPS really quickly, and around 240, where we last did the valuation, it's like around a 1 peg, which is not crazy with these overall growth rates, especially with that renewed guidance from Lisa Su today, or rather yesterday during their conference. Moving on to Amazon, guys. Amazon is going to be a nice opportunity soon, in my opinion. It's a daily uptrend, right? We had a nice rally after earnings. We set the higher lows right here at about 238. Now, if you roll this over, daily downtrend, pay attention what they're trying to do on the higher time frames. It's going to be a nice breakout and retest of where prior all-time highs and big resistance as well. I will be looking to position on Amazon a little bit more, either for some short puts or even adding some shares to the long-term portfolio. I think this is a very nice possible setup that we might be approaching in the next few days. In terms of their forward valuation for adding some shares at 250 wasn't too bad, right? 33 forward multiple, a 1.64 peg. So that's at 250. Shave 10% off that price by pulling back into the 230 range. and you end up with an even better valuation. It'll be almost under a 30 forward price to earnings, looking pretty good for Amazon. And I'll remind you, they had really good earnings, which we did cover on the channel a few weeks ago. Moving on a good old Google right now. Google Bull's a little bit tired over the course of the day today, but still no loss of the trend, right? Your higher lows are here, 276. The bears tried to go for it, couldn't get it done, right? So the higher lows are here, 275. Not that much space. If you roll this entire move over, in my opinion, it would look really good for some weekly consolidation on Google. It needs it right now, right? The weekly timeframes are very overbought, which means swing trade longs from here, somewhat of a risky proposition, right? The risk reward is just not there in my opinion, but pull back a little bit on the weekly and offer me a back test possibly of maybe 250s, these prior highs, and the 12 EMA, and I might just get a little bit interested in doing some swing trades on Google. In terms of share additions from here all the way through that consolidation, not too bad, guys, right? Just DCAing Google type of thing for the next 3, 5, 10 years in your portfolio. Not terrible. The valuation is not that bad. At 290, you're sitting at a 27 forward price to earnings and a 1.8 peg. Moving on to Meta right now. Meta, sadly, Meta down again, which is what I was saying in the past few days. It's very tough to say that this is a bottom, right? The bears have a lot of momentum right now. And although we got a nice bounce going, a bounce is only a bounce until you confirm a trend change. Usually you want to see the bounce last a lot longer than it did and go a lot higher than it did, right? But unfortunately now you can see on Meta, I don't do this too much for you guys because, you know, well, let's just say I do it in my Discord, but on YouTube, I used to do it a lot more, but pay attention, guys. When you have an hourly downtrend like this, if you're looking for the daily bounce to continue, you have to keep the hourly uptrend. As soon as you lose this hourly push again and go hourly downtrend, that's the end of the daily bounce. And sadly for Meta, right? That is the softest bounce I've ever seen in my entire life, not even a 20% bounce. You roll over the lower time frames that quickly, and you are going to retest the lows and possibly go even deeper. That being said, we are still in daily oversold conditions. Where could we possibly be heading, guys? Well, the clear area for me is 600 down to about 557. This little pocket right there, it was a lot of price action in the past, right? The next big one is a lot lower than that. You're talking about all the way down there, right? But let's talk about this one first. Weekly is looking pretty good for some consolidation here. It is a big weekly downtrend. So to turn this around on Meta, step number one, you got to give me the daily uptrend, right? Show me that the bulls are now stronger than the bears. And then, only then, can we talk about weekly bounces and recaptures of the weekly. And only then can we talk about the next leg of Meta higher. In terms of what I'm doing with this, longer dated positions, right? Either leap call options or longer term shares, because right now below 630, the valuation is really good. You're trading a 20 forward multiple and a 1.63 peg. Meta, in my opinion, is one of the more attractive big tech names out there in the market. And of course, the reason for the decline has been the CapEx raise guidance that the company gave on their earnings and the expense raise in terms of the guidance as well. Because let's be honest, right? Meta doesn't have a large cloud service like Google has, Amazon has, Microsoft has. So a lot of analysts and even retail might be scratching their heads as to why Meta is spending so much darn money on the AI race if they can't fully monetize their expenses just yet. Moving on to Microsoft right now. Microsoft up about 0.48%. Microsoft was down pretty big today, but able to kind of claw it back. Now, that being said, we were in a daily uptrend, which we forfeited after earnings. They had really good earnings, by the way, but the market just not having it. This is what I'm talking about about NVIDIA, right? NVIDIA could have really good earnings like Microsoft did and still go down, right? Which is why earnings is always a casino. So Microsoft bulls are looking to protect these lows, 496. We have not cracked them. The bounce is underway right now, but pay attention, guys. It's a very small bounce, right? So in the event that we lose your short-term timeframes again and go into a hourly downtrend, that's the end of the bounce. And with that weak of a bounce, guys, you are probably going to roll this over. You are going to go into further weekly consolidation and also further monthly consolidation. Where I'm looking for Microsoft is maybe down here, 475, touch of the 12 EMA. That would be a nice place to add some shares. In the low 500s right now, the valuation is not too bad, but give me another 10% discount from this 520 where we did it, right? Into 475, you'll be trading right around a 34 price to earnings and closer to like a 1.75 peg. And I can get behind that a lot more than I could up here at 550. Moving on to Netflix right now. Netflix, 1.85%. Netflix really strong, man. Coming into the stock split, this is a nice bounce, right? The bears had daily downtrend control, and now we got a nice engulfing move. So they've created a ton of space off the lows anything above 1,075 on any retracement looking for a higher low, possibly to reset the daily uptrend into that infamous stock split. We are reclaiming a support area that we had temporarily lost. They did a good job of defending around the 200-day EMA. On the weekly timeframes, we are still in the context of a weekly downtrend, but the bulls are putting in work, man. You got to give it to them. And we reacted from a few key areas, right? You notice that on my charts, the daily 200, the weekly 50, and that monthly 12 are roughly the same area, right? So those are your long-standing moving averages, depending on what time you're looking at. The way that you use them is just go back in history and see when Netflix pulls into its 12 EMA in the context of nice bull markets, is it a nice buying opportunity? Most of the time, you will find that the answer is yes, depending on the stock. So I was a big fan of buying Netflix 1,100 down to $1,000. I was buying some Netflix down here. And when we have the stock split, what's going to happen is that it splits 10 for 1. The new share price will be around $110. So I will probably be doing some sell puts down here, some short puts, and maybe even some leap contracts too, because Netflix still remains down from the all-time highs about 15%. And the valuation around 1,100 is now fair in my opinion, low 30s multiple and a 1.7 peg. Moving on to good old NVIDIA. NVIDIA putting in some work today, man. They were down early on in the day, and they recovered a little bit, right? So daily downtrend, the bulls have a nice bounce underway right now. Take a look at this bounce size, right? It was a 618 bounce. They're trying to set some higher lows and go for the daily uptrend change. I don't know how much progress we'll be able to make much before their earnings next Wednesday. Am I expecting NVIDIA to blow through the top before next earnings? No. Am I expecting them to break down below these lows before next earnings? No. We might just stay stuck in this very wide, I will admit, it's like a 10% range, right? I would expect us maybe to stay a little bit muted within this range until the time that earnings hit. But the price action right now is not looking terrible. We still do control the weekly time frame. We have perfectly backtested the 12 EMA again, backtested resistance, support, and support again during that sell-off. And now we've created some space. So what we want to see is NVIDIA try to move towards the higher end of this price action range right here so that we can create some space. That way, if ever earnings are not well received for XYZ reason, at least we got a lot of space to pull down into, right? Kind of like Palantir, to where we kind of broke out a little bit. And then after earnings, it wasn't well received, but we had all these guys to support us in terms of price action. I kind of want to see the same thing for NVIDIA, right? Give me a little bit higher. And that way, if we get a 6, 7, 8% pullback after earnings, at least you have a big cushion to come down into to slow down those bears. In terms of forward valuation, though, NVIDIA, not that bad, right? Around the 200 mark, you're currently trading between a 1.26 and 1.43 peg. The reason I have a range here is because we don't yet, well, we have the revenue guidance, right? But this quarter, we'll be getting some margin guidance as well, which will help us kind of zone in on what EPS rate we should be expecting into next quarter, but maybe into next year as well. Moving on to Tesla right now, Tesla's still doing a whole lot of nothing. It's just literally trapped right now. So the daily is a mess. It's all over the place. Weekly is just sideways consolidation / accumulation. You can call this a bull flag, right? And I would agree. But what I've been saying about Tesla is, you know, if tech continues to slide, Tesla's probably not going to go up all on its own. So where I'd be interested in Tesla might be down here, 405 to 385, a nice backtest on the higher time frames, right? Monthly, nice monthly expansion, extended from the 12 right now. Give me a backtest into prior resistance, which will be support. The 12 EMA is going to catch up. Maybe this would be a better location to build some swing trades on Tesla. So no action on Tesla for me right now. And of course, if you're wondering in terms of long-term share buys for Tesla, well, it depends on, you know, which part of the narrative you are most focused on. If you're focused on the short-term negatives, you probably don't like Tesla up here at these valuations. If you are focused on the long-term positives and believe Tesla will be a $2, $3, $4 trillion plus company with the expansion of FSD, with the expansion of Optimus, their energy storage business, et cetera, well, maybe the valuation still makes sense to you up here. Moving on to good old Palantir. Palantir down 3.54% today, but the bulls are playing really good defense, man. We had the, you know, daily uptrend unwind. We came into some equal lows right here, and now we might just get stuck in the infamous gulag that we've been stuck in for the past like month and a half, as Palantir continues to struggle with, you know, valuation concerns versus the business model. You know, like there's a lot of pros for Palantir, but there is also a lot of cons. The cons are the fact that we're very extended still on the monthly timeframes. We are very extended in terms of valuation and in terms of expectations or whatnot. So the fact that Palantir is consolidating right now might not be the worst thing. Price action, if we're looking for a bit of a long swing right here, it makes sense, right? So the bounce size was a nice 618. Right now, what we're looking to do is set some higher lows into support. So if we're looking to go long here, it makes sense for a swing trade, but we have to have a stop below this guy. Because if you break down below there, you invalidate a few things. Number one, daily uptrend is lost. Number two, support is lost. And if that's the case, well, you might just be going for a bit more consolidation on the higher time frames, weekly and monthlies, which could bring you down into 150, 140. I don't think Palantir is going to unwind in that fashion unless you see a further large unwind in tech names overall. But just pay attention. If you are trading this one, please trade with a stop loss because the next stop is a lot lower. Moving on to SOFI right now. SOFI, new all-time high. Phenomenal breakout by SOFI, daily downtrend. Engulfing move. If the bulls get a little bit tired here, we've created a lot of space off these lows, 25.71, and we can do the breakout, retest, and maybe run trade as well. Support stays below us. Let's call it 30. I have 29.71, but hey, I mean, I can extend this a little bit, up to 30 and get these tops right there. You guys get it, right? It's a whole range. Prior resistance, we use it as support. So this whole 30 down to like $28 range, nice area for a possible back test for some possible swing trade longs. In terms of the higher time frame charts, looking good, man. They never lost the weekly time frame at all, right? Beautiful weekly uptrend, higher lows set, back testing the 12, and now looking for expansion on the monthly time frames. I will admit, they've been overbought for a while, right? And the bulls are just not slowing down. This is like 8-9 months of green in a row for SOFI. A lot of retail interest, even some more institutional support right now. And around 31, is it still a good deal to buy for a long-term portfolio, 3, 5, 7 years? Not too bad. It's a 1.22 peg. Sure, the EPS growth rate will be slowing down eventually, so you can even focus on price to sales, right? You're trading at an 8.6, which is not terrible for a fast-growing fintech company overall. I do believe this company can go and hit, 40, 50, $60 billion market caps. You don't know if they're going to do it in the next 2 weeks, but the path for SOFI remains pretty clear for the next 2 years. So I do believe there is still some meat on this trade. You might not get as great compound annual growth rates as we got when we bought it down there, but still there is some meat left on the bone for this trade. Two last ones, Uber not looking terrible, right? Just consolidating. So short-term price action is a little bit awkward. There is a possibility for some swing trade longs from here, but kind of like Palantir, right? You got to put your stop below here at about $90 because if you invalidate this, you lose the daily. The weekly also goes into a weekly downtrend, and then you go into monthly consolidation. And the next stop for monthly consolidation is like mid to low 80s, right? The 12 EMA is down there. Prior resistance, which is current support, is down there. And it would look really good just to get some monthly consolidation before Uber kind of moves a bit higher. And that is kind of what I'm waiting for too, to have some more heavy positions, let's say, like some short puts or things like that. I'll be looking for like mid to low 80s. At 94 right now, the valuation is not terrible. It's a mid 20s forward multiple, a 1.64 peg, and a 4.4 free cash flow yield percentage rate, which is very solid, right? I'm not opposed to nibbling some Uber shares for a long-term portfolio here, but if I want to get the best possible entries for like leaps or some heavier trades, a backtest of here would be so beautiful. And now lastly, moving on to TSM. So TSM, down about 0.2% today. Price action is all over the place. It really reminds me of this whole section back here, where it was very awkward price action with a bit of a downward bias, because that's what we have right now, right? The daily downtrend. The bulls are trying to reverse it. We'll see what happens, but it's just a very awkward price action range right now. The weekly timeframes show this best, to where, similar to back here, we're just kind of consolidating the price. Tremendous rally here, and now just time for the fundamentals to catch up to the price, and also maybe backtest this 12 EMA, which TSM has done many times so far. On the monthly timeframes, though, there's still a little bit more, right? So in the event that semis pull back, it wouldn't be the worst thing at all, guys. A lot of these charts on their monthlies are very extended after, the massive rally launch from April. We didn't really pause that much into the fall before a massive leg higher. So if this breaks 270, I'll be buying TSM all the way down to like 250, 240, because the valuation up here makes sense. But as we get closer to 254, 240, it starts to get arguably cheap. And that's kind of what I'm waiting for. So TSM not looking too bad. And I do believe this one will move a lot with the NVIDIA earnings next week too. That's kind of everything I had for you guys for the overall market rundown. I tried to get through this quickly so that we can spend more time on this good list right here, the biggest gainers and losers of the day. All right, so let's get into it. We're going to spend about 5-10 minutes on this and no more than that. Moving on to Circle right now. Circle after earnings down 12%. Maybe I'll cover their earnings tomorrow. I know they had them today. Their earnings were actually not that bad. The forward guidance was a little bit soft. Does it warrant a 12% sell-off? Probably not, but this one right now is kind of in no man's land. The one thing you would focus on Circle would be for longer term buys, because swing trades right now are kind of out of the question, right? You're just catching a falling knife. There's nothing below us. Daily bears are in control, weekly bears are in control, and the monthly is just completely unwound into now a monthly downtrend. So it's going to take a long time to turn this around. However, if we're focused on the long-term aspects of the company, I have some base and bull case scenarios for you guys for a 10 price to sales or a 15 price to sales. At 10 price to sales by 2027, you're looking at over $200 per share for a $55 billion market cap. The one thing you need to focus on Circle is the expansion of the USDC network. The last time we covered their earnings, they were at about 58 billion in terms of their USDC total market cap, and now they're at upwards of 75. The network is growing, but the thing that's not growing is the stock price. So when the fundamentals are growing, when the network is growing, but the stock price is not following, that's when you can kind of find some really attractive buys, but go slow, right? It's impossible to say where the bottom is actually going to be, as the retracements are quite deep right now, and it may take a long time to turn around. But I am buying a little bit of Circle, but my time horizon for my buys, guys, is in years, not necessarily in days or weeks. And as I said, it's impossible to build some swing trades on this one unless you get a daily uptrend and some form of a tradable bottom. Now let's talk about some of the neo cloud providers. And this trade has been all over social media recently, right? Because, of course, of how fast it actually ran up. And the best way that I could describe this one, guys, is a reset of expectations, right? We covered all of their earnings. We covered NVIS earnings. We covered CoreWeave earnings. We covered Iris Energy earnings, right? And the one common theme is, yes, these companies have huge backlogs for the future, right? End of 2026. And what I mean when I say a reset of expectations is the stocks were moving casually here, and then they caught the social media fire, and everybody thought that this was going to be the absolute moonshot, which it was. Let's be honest. These companies 2x'd in like a month and a half. They blew through all technical indicators of being overbought all over the place. They never really set much support on the way up. It was just constant buying. And this was when the market concentration was relatively low. You remember at that time, even when I was on holidays and I was filming the videos, I was saying it's AI versus everything else. People's expectations were really high. But now after these companies reported earnings and they realized that there's going to be some financing, so some more capital raises in terms of debt, possibly some more dilution as well, which is what NBIS hinted at yesterday. And the fact that the construction timelines for the data centers are a bit longer than I think people assume they would be. People assume that they can get all this power online right away. There's a reset of expectations, right? Additionally, if you take a look at the monthlies, right, we ran so far away from our monthly moving averages, and now we're just kind of correcting back to kind of, just a little bit of a gravity effect, right? I wouldn't be too nervous about these companies, but these companies, if you're investing in them, whether it's NBIS, whether it's APLD, whether it's Iris Energy, like IRN, whether it's something like a CIFR, right? They can't move up in an absolute straight line. There needs to be a reset of expectations. When it gets too bullish and too easy, that's when the market usually throws you a curveball. But if you are a long-term investor in these companies, you should really welcome a lot of these discounts right now. But we're losing price action, right? NBIS going into a weekly downtrend. If we close the week like this, that is going to be monthly consolidation. So I'm getting really interested in this name, 90 to about 80 bucks. But once again, I'm getting interested because of the forward growth prospects, not necessarily for the short-term price action. Short-term price action is full bear control right now. It's really tough to say, yeah, we can absolutely buy here for a swing trade low and it's going to moon, right? It's just not that simple. The bears are in full short-term control, and you can clearly see a reset of expectations, whether it's this one, whether it's APLD also coming back down, whether it's Iris Energy. So a few of the levels that I'm very interested in, Iris Energy, 50 down to like 40 bucks. I get interested for some longer term shares, looking for a bit more consolidation, right? Healthy consolidation. We know they have huge backlogs. We covered their earnings. We know the valuation is fair in terms of forward estimates. But like I said, it just doesn't move up in a straight line. We were very overbought on a lot of these names for a very long time. We didn't set much support on the way up. So now just a reset of expectations. NBIS, whether you like this one, whether you like CIFR, right? Depending on which one you like, it's going to be an accumulation phase for the next eventual rally. When is the next eventual rally going to happen? When are we going to go back to the all-time highs? I don't know. You don't know either, right? So the best thing you can do is adopt a longer-term thesis for these companies, because when you lose the daily uptrends, guys, it's not so simple to derive any short-term swing trade plans as of just yet, because now the control is flipped from over a month and a half, 2 months of pure bull control, easy buys of the dips, right? And now into some bearish control. A lot of these names are down huge, like 30+% in the past few days. Not because earnings are bad, but because of what you're seeing circulating on social media right now. And a few analysts are commenting on this as well. Will they be eventually profitable companies, right? What are going to be the interest expenses of them scaling up those capital expenditures and taking on all of that debt? What are going to be the operating margins moving forward, et cetera, et cetera? Are there going to be construction delays like we saw on CoreWeave, right? So a few levels that I'm paying attention to, right? On CoreWeave, I like this one a lot, man. Low 80s and even lower for an accumulation trade for the future. Clear, in my opinion, but deriving whether or not this is going to be a bottom, short-term bottom for some swing trades, out of the question for me. And the same can be said about all of them. NBIS, I'm not going to call a bottom here, but I do like this one. 90 down to about 70 bucks. Could be a decent little pocket for entry. Iris Energy, maybe 50 down to 40 for some accumulation trades. CIFR, you got to give me a little bit better. Talking about maybe like 14 down to like 10 bucks. A big monthly retracement, right? Give me the monthly retracements and I will participate. And we see this happen all the time. And another big reason that a lot of that segment is down is Oracle. Oracle is like your data center leader, right? That being said, Oracle is just absolutely flushed. Weekly downtrend, they gave back the entire 40+% earnings move. It's just been down, 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 down. Daily oversold. Oracle once again raised another $40 billion in debt. And this is why I don't play this company at all. I've never enjoyed playing this company. I think they have a lot of debt and they never really justify how they're going to pay that debt down, right? As of right now, $111 billion in debt. You add another 30, 40 to that, like they're planning to do. That's a lot of debt, man. A lot of debt, right? Especially in relation to their free cash flow and profit margins. So Oracle is just not my favorite play, right? It is coming back down to support 225 to 213. It's trying to come down here to the 12 EMA as well. But look, that's a full unwind, right? It may take a little bit more time to get these plays going again. The valuation is not terrible, but I have a problem with Oracle's debt, man. It's the reason why you have not seen me play this company. I would rather play other players, on pullbacks like Amazon or even like NVIDIA or things like of that nature. So Oracle is just not my favorite play. I'd rather play NVIDIA. I'd rather play Amazon. I'd rather play Broadcom on some pullbacks, like some monthly pullbacks, right? But Oracle is just not one for me. If it's for you, that's perfectly fine. Just be careful with it. But you should always know, guys, your bull and bear case thesis and what is bringing these stocks down. So please keep that in mind. Moving on to further players, I guess we can talk about ASTS. Might just be looking for another full retrace, guys. Just watch these 12-month EMAs on all these growth names, right? We might be pulling back ASTS 50 down to 40. If you ask me, right, it's ASTS versus Rocket Lab. I personally prefer Rocket Lab. If I'm building some shares, as we covered their earnings just literally the other day, if I'm building some Rocket Lab shares, I have to have a timeline 2026, 27, 28, and beyond, right? Because short-term price action, we're really losing a lot of momentum. So Rocket Lab might just be coming into extended consolidation where I'd be looking to build a position 50 down about 40 bucks and then probably just hold a lot of those shares for the longer term. If this is a company that you believe in, that they'll be able to rival SpaceX and their valuation and their revenues by bringing on board their Neutron rocket, which will only probably have some successful launches and scaling coming second half 2026. So you're going to see a common theme here. All the names that are down today, especially the fan favorite names, it's a reset of expectations because a lot of those names, we talked about it, man, when the price runs this much, essentially what you're doing is you are pulling forward too many revenues and earnings from deep down in the horizon, right? You're pulling forward 2028, 2029 earnings right now. So it doesn't leave good margins of safety on these trades. But when we get some nice healthy pullbacks, then it starts to be a bit manageable. So that's why in a lot of these names, while they're rallying a ton, you see me say, guys, be careful with these names. Don't buy them too high. The risk is very high when you're buying them on expansion phases like that, right? It's good for momentum trading, not so good for building longer term positions and getting FOMO, right? No, the longer term positions should be built on the big pullbacks for you to get the best possible risk to reward that's available in the trade, right? So those are kind of, I mean, we could talk about these names all day, right? But mostly all the names that were down today respect that same type of thing, right? HIMS, we covered them after earnings not too long ago. HIMS for me is a buy down here, mid 30s. So I'll be selling some put options down there. And down there might be looking good as well for some leaps or some leap call debit spreads, right? December 2027, not too close because they need to kind of reset to the upside. It might take a long time. Grab as well, looking really, really solid, man. I love this chart. Really enjoy this chart a lot for a back test of possibly this area right there. 550 down to like $5. I might be buying some grab shares myself. It's looking very good. And everything else on this list is kind of too high, right? Shopify is a little bit too high, but if you give me access to maybe like the 130s, 120s on a pullback to the monthly 12, maybe I'll be interested for some short puts and other things of that nature, right? All the plays that I'm referencing, like app 11 too, right? I want to see pullbacks to the 12. You guys have noticed a common theme. I'm very patient because there's so many stocks in the market, but stocks like Netflix, right? When they pull back to their 12 EMAs, that's when I really get interested in these names overall. So I'm very patient in terms of my swing trades. And then when I find high quality companies that have completed the retracements that I've been looking for, that's when I hit them with size and I hit them with time, talking about leap call options with like a year and a half, 2 years, or just going with overall shares. But you have to give me my desired retracements. And a lot of my analysis is on the 12 EMAs on those monthly timeframes, going back and using just historical standards. So please keep that in mind. In terms of names to the upside, guys, well, it's just a whole bunch of names that have been left behind, right? On had their earnings. They had pretty solid earnings, which did contribute to bringing up Nike stock a little bit, contributed to bringing up Decker's Outdoor Brands a little bit. So very healthy. If you're asking me out of all these plays, what might be my favorite? Probably Nike. Nike is a recovery story, right? It's very cheap right now, extremely cheap, but it will be extremely slow as well. Moving on to a couple other names, right? Open Door. We were commenting on this in the past 2 days. The time of position was when the CEO said he would be buying $1 million of shares at the open. MACD kind of crossing right now. Weekly retracement seems to be finished, and the monthly also seems to have set a monthly higher low, going for the expansion. Only risk what you're willing to lose in this stock. Next price target, of course, is the infamous 15 level, but only risk what you are willing to lose, guys. I mean, Oklo, they had their earnings. Funny enough, they had their earnings yesterday and they actually went up today. Even though their earnings, they guided for a bit better margins, they have no revenues. I was telling my Discord chat this morning, right? Why are companies reporting good earnings but going down, but Oklo reports no earnings and goes up? Well, it's very simple, guys. I mean, if you're not making any money, it's kind of tough to miss expectations on revenues, isn't it? Just kidding, right? But overall, Oklo as well, same concept. They're not making any money through 2028. So this one, it's not my favorite play in the books, right? It's nice when it has momentum and stuff like that. But when you lose all the momentum, you might have to consolidate a little bit more. I'm not a big fan of playing this one. I'll play my other favorite utility plays. Affirm is a stock that we were talking about after earnings. We were saying it was a phenomenal buy right there. The bull's looking really nice for some expansion. If we pull back a little bit, I will continue to sell puts down there. But Affirm looking really good, man. Weekly, right? Trying to reverse this time frame right there. And the monthly, well, what do I keep saying, right? I sold my call options after earnings here. It was extended from the 12. And now we did a good job the last 2.5 months pulling back into support. And oh, lo and behold, into the 12 EMA. That's when you get the best risk to reward entries in stuff that are currently in monthly uptrends, right? So keep that in mind. Chipotle and things of that nature, I'm not that interested, but you might be able to see a little bit of bounce right here. I mean, their guidance is their guidance, right? So although they can bounce a little bit, I think it might be very choppy until Chipotle can show better same-store sales growth. So although Chipotle is quite low right now, the valuation is not terrible. I mean, guys, they're trading for the same valuation as some stuff like Amazon on a PEG ratio, right? So it's like, would you rather buy some of the big tech names that are currently down right now, or would you rather buy Chipotle? Let's be honest, right? In terms of valuation. So that is just the case for me. And I think that's pretty much it, guys. I mean, the rest of the market, I mean, several names out there. I mean, some of you guys might want me to talk about UNH. UNH is the same thing. UNH is like NVO, right? These are two high quality businesses with pretty good business models, good revenues, decent free cash flows, decent forward guidance for recovery stories, right? As good as it can be for recovery stories, yeah? But they're going to take a lot of time. You should not be expecting this on NVO or UNH. So are they nice longer-term recovery story positions? Yes. Taking a look at Booking.com. Booking.com was a buy after earnings. Maybe you guys were able to position a little bit. Once again, What were you looking for? I mean, I sound like a broken record, right? But every time these names, while they're expanding fundamentals, keyword, while they're expanding fundamentals, not if they're not, but while fundamentals are still good, the guidance is still good, pullbacks to the 12 are decent areas to be looking for acquisitions for some longer term shares. And that is kind of pretty much it, right? All the stuff that I want to cover. CLH is not a bad buy down here, mid 40s either, if you like this company too. And I think that's pretty much it. I mean, we've kind of done the rounds across most of the stuff. Most of the other stuff we've already covered. There's a bit of a value rotation. I was talking about one of my favorite ones was also CP from the lows here, daily oversold conditions. I was selling some puts, but I also hold this one in my long-term portfolio. Easy buys, in my opinion, into 4 years worth of support. So that was also a very attractive one too. Names like ASML, I need a bit more of a pullback for me personally. I mean, I spent like a year buying shares down here, and I spent a year, hammering the table about this stock on the channel. So hopefully you guys are able to position in this company with a very high quality moat and huge competitive advantages, because right now the technicals are a little bit stretched, and even the fundamentals, right? Now they're a little bit stretched. Down here, they were very affordable. Now it's just a little bit too much for me. So that's everything that I had for today's video, guys. I mean, maybe in future videos, I'll go a little bit deeper down the list, talk about names like, but all of these we talked about after earnings, right? So if you guys just want my impressions on a stock that maybe I haven't talked about today, just go on my channel and type in the ticker of that stock, and you might just find a video where I covered them after earnings type of thing. But that's it for today. We spent a lot of time on the biggest gainers and losers and why certain stocks are down, reset of some expectations, etc., etc., etc. So that's it for me today, guys. Hope you guys enjoyed the video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these every Monday to Friday after the close. And last but not least, if you have any questions for me or you want to leave a comment, please feel free to do so down below in the comment section. I'll be answering all of your guys' comments tonight. Sorry for not answering them the past few days. I've been very, very, very busy, but I promise I will answer them mostly all tonight or tomorrow morning very early. And additionally, if you are tired of trading and investing in the markets all alone, all by yourself, you may consider doing so as part of a community. We have over 300 active members in our community, and we trade the markets and invest in the markets every single day. The link to join us in the community is down below in the video description. And what you get access to is, number one, all of my trades in real time, whether it's the wheel trades, the long directional trades with shares or debit spreads or leap call contracts, or my long-term portfolio buys. You get access to all of them. So here's just a lot of the trades that we've made over the past few weeks and months. The green little check marks are wins. The red little circles are losses. These little target things are assignments for the wheel trades, of course. Obviously, the goal is to keep the wins much more frequent and large than the losses. And we've been doing a really good job of doing that together in the Discord, but also on the channel for the last 2.5 years. I've been doing this for you guys, right? So you get access to all my trades in real time. You get access to our private morning live streams every Monday to Friday for about 2 hours near the open. I trade live and then take all your guys' questions on your stocks, your options, and your long-term portfolios. It's a great place to ask me one-on-one questions on your favorite stocks or plays. You also can do that in our group chats, right? So if you wanted to ask me questions throughout the day, you can type out your message, and I'm usually very fast to answer throughout the day. You also get access to our private video section, educational content, like 15 hours of educational content in there. All of my trading strategies on leaps, debit spreads, credit spreads, advanced wheel strategies, technical analysis, fundamental analysis, how to build a long-term portfolio and why, how to build a trading account depending on your risk tolerance and the account balance that you currently have right now. So much educational content in that section. Our members really enjoy that. And last but not least, you get to copy paste all of my charts, literally all of my charts whenever you see support, resistance on hundreds of charts. And when you see my fundamental breakdowns of companies, you can copy paste all of it and all of my watch lists that I use to trade the markets every day. Just an added bonus for our Discord members. So if any of that sounds good to you, the link to join us down below is in the video description. And if not, I guess I will see you guys right back here on the channel. Pleasure as always. Have a great rest of your evening. Take care and peace.